So I do have, so we can talk about trends a little bit. Sticky, when you're using that trend, what you're doing is you are attacking the range that that trend represents. So you're going, so you're going from what looks like 30, what did you say? 34? So here, so this would not be a trend in play right now. You know, you can use something like, I'm assuming you have this, and then it's adapted to 31. So something like this, maybe? Well, if this is the trend, or if this is the trend, whichever it is, I wouldn't have it anymore just because it represents like, okay, so here's the thing about trends. If you're using this trend here, let's get that back on the screen. If you're using this trend here, what's going to happen is it's going to represent attacking this part of the move. Okay, so let me make sure my screen share is okay. You guys need my cursor. Yeah, it's going to represent attacking this part of the move. So like if you were here breaking this trend, you'd do something like go here, because this is then just going to adapt trend. And it's saying like whatever the base point is, it's trying to ladder that reach point, or it's trying to, you know, adapt that reach point. So if you were to break this trend in this moment, that would be great. You break that trend, and then it can represent either holding this part of the move and then adjusting trend. And once this level is tested, you no longer need to break that level. All you would have needed to do would be break this trend, and this level would be broken automatically, right? So that's the thing. Like once that trend gets created off that level, imagine that that trend is now where that level goes. So imagine, oopsies. Imagine this trend is like this, right? Or this level. It's like, okay, the level's good, level's good, level's good, level's good. You touched it there. Now the level goes like this. Level's good, level's good, level's good, level's good. So by breaking this, you actually delete this here. So, you know, breaking that level in the current part of the move wouldn't do anything because your next part of the move would be right here. So it wouldn't actually do anything if you did break that trend, just so you know. If you were breaking something like more legacy, like a weekly maybe, you know, you've got something like this here, that would be a little different. Come on, dude. This here, and then, you know, this would adapt out. But even this really isn't, really, it's not even really your trend yet. Yeah, no, I got to put the new keyboard software on. I haven't done that. It's not even really your trend. Like you can delete this guy up. Ah, shoot, we don't want to delete that one. We can delete this guy up here. Even breaking this right now would just get you to a point where you're back testing this weekly possibly, or getting above this right here at 25, and then you could make a trend off of it, and then you could break that, and it would start like the larger run up, right? Then it would represent more of getting back into this range here, where the next piece would be like if you were breaking this, then maybe you would, you know, be going after 29. So there's like a $4,000 gap there. That's a big goddamn difference. That's like 20%, right? So, you know, at this point, you haven't really done anything. But yeah, those more legacy trends, like if this thing was out here, for sure, because then it's, you know, all the other level for it to even get out here, for example, for it to even be this far out, it would mean that it had to come up and touch something like up here, which means all this junk is tested. You're already past this. So then if this came down like this and then broke that, like then you would be up in like, you know, this $50,000 range off of this, you know, $38,000 range. So you'd have to, you know, in order for one of these trends to even be like, oh, legacy break, like it has to array out. And by arraying out, it means it's already past this and this. So this stuff wouldn't even be the way. It's not like you'd float out here and then all of a sudden just be like, oh, that's that trend and move down. You know, then you would just array the trend to there, and then you would do something like break that and then rip up. So yeah, breaking that 4-hour trend doesn't really do much for you right now, Sticky, because breaking that trend just takes you to the next range, right? So range by range, range at a time kind of thing. Going over the logic of the pump would be helpful for me. Not sure if I understood it correctly. Didn't take a trade by X. Didn't expect it to blast past that 20K range. Agreed. Okay. Got it. Thank you. You're welcome. So, you know, these trends, they, you know, we don't really use them right now. And then these are just combo levels is what you're seeing here. 4 hour, oh, oops, 4 hour, hourly, and then 15. I think that's what that was. Yeah, they're just combo levels. Hourly, pretty sure this was just the 15 inside that hourly. yeah, just combo to the 15, no big deal. And then you have like an origin right here. I believe you actually have this like further back. I marked it right here. That's not right. I think you have like an hourly somewhere here. No, it's actually the 15-minute right there. I'm wondering if that's what it hit. I haven't checked. Yeah, that's what it hit. That makes sense because it's playing inside of its range. So that's fine. It's like 15-minute break level that can still ladder this. So, you know, you've got kind of this to there, right? You've got that to that for your trend, but it's very useless. Very useless. Again, same thing with any kind of like, you're talking about like a daily starting at 32, like any stuff like that, like 32. So that's this one here, and then this is going to be like this, right? So like this. Yeah, I mean, you break that, you're going to be back up in this range, and this will adapt out, right? So, but you're already kind of attacking this range. So, you know, the breaking up of this move, it shouldn't be a surprise with trend here. Like it shouldn't come as a surprise from trend. This one here is important. This one here is important. This upper range trend. Something like that, I think is what you're talking about, right, Gamma? Yeah, looks like it. Okay, let's get rid of this. We no longer need that weekly. We no longer need this one. We may actually need this. We don't need this. We don't need. Where does this come from? This was that 19.6 level. So this was polarity in the move. This was that polarity point of the move, 19.668. I remember that. So you guys want to go over the pump? Okay, we can do that. Everybody already knows hits the 4 hour, right? That's fine. Hits the 4 hour, starts to stabilize, creates 4 hour here. I had it lower, pegged it as the hourly, but never came back and back tested. We don't have. I don't think we really need to go over the bottom of the move. I don't really think people are going to care too much about this. This is kind of straightforward. It starts to move up, creates its level, breaks above its range, creates a new range. I think the real shocker is this stuff in here. So I think that's what's the most important part of this trade to go over. So we can get rid of this. We can get rid of this. I believe this is okay. So this is a weekly. Okay, so that's like a weekly hard close. Okay. Okay. Down there. Yep. Okay, perfect. Yeah, I think people don't really care about this little part right here. I mean, it's pretty straightforward, right? This part of the move, interior polarity, 15, break above it, back test it, hold it. Like that stuff's all straightforward. 4 hour here. 4 hour, I believe, is here as well. I believe I have that pegged as a 4 hour. Yeah, body and wick, right. So wick, body, create 4 hour trend. That's fine. This is supposed to be daily. Daily trend. Adapted to the 4. That's good. We can keep this. Like this will be a good ladder point for the future, although it just kind of looks like it is back tested right here, but it's a pretty clean move over. So this will be good for the future here. The body of the move. If we get back down there again, that'll kind of be like, can it hold the move up? So yeah, you know, this pump, the most important part of it is here. So we can just take the replayer tool. We can go kind of like right here. No. And then let's just go take a look. It's like you've got your hourly right here, right? Like that's straightforward. Hourly hold creates interior range. So when we were doing our live trading session, and we're going to delete this, we don't need it any longer. And I don't think we need this either. And we're not going to need this. We're not going to need. Okay, you know what? Let's leave that stuff because this is where the live trading session was. So the big part of this trade was recognizing this 15-minute trend. Like you hit your hourly level, right? So we'll start with analyzing the move. You hit your hourly level, right? It had held the move. This is what we were using that night on, it would have been Thursday night. I believe it was Thursday night. And we used this 15-minute trend to see what was happening with this move. So this 15-minute trend was constantly hitting and going over this move. And we missed our entry right here, actually. Was it here? I believe it was in and around here. It was somewhere around here that we missed our entry because we were trading this and we took the top and tried to find the bottom of the move. And then so like this really, the important thing about this was the 15-minute trend. So that was pretty easy to find. Like you have your hourly hold level here. You don't have your hourly base here. So we can talk about trends a little bit because I think there's something important to talk about here. When you have trends, you kind of have like, I guess I want to use the word allowance. You have like an allowance with trends of what they can do. So like we can't start this trend as a 4 hour because there's just not enough time. Like when you're looking at this trade, like when you're in this moment and you're right here and you're like, oh yeah, let's use a 4 hour trend. Like obviously you can't do that. It hasn't been there long enough. So you can't do that. There is no trends to attach it to. You have to go up, come down, stabilize, move up. Like you're talking about 3 or 4 days of movement, maybe, or 2 days, or maybe one like perfect day of movement. So you can't use the 4 and you can't use the hourly because it is an accumulation candle. So what you could do is you could do two things. You could either do range trend like this, which is fine. That is going to be a range trend hourly here. That is going to be an interior range trend, right? So that's where you're getting like a lot of this stuff in here, your interior range trend. But then more importantly, this is kind of representing the base of the move, right? So like put this trend here. This trend represents this level. So what I want to do is I want to make this one thick like this. So it's very, very straightforward. And we're going to make this one like just dashed. Sure. Sounds good. When this is tested and this trend gets created, this trend is now the level. This trend is now the hold level. So like as long as this trend holds, this hold level is holding. So this is your hold level on the move. Like you've got trend, it gets created off of this. This is a range trend. That's one of the things about range trends is they act as that level, right? So take that back and this level looks like this. It goes this way, this way, this way, and then this level goes this way. If you were to break this trend, this level's already broken anyways. So that's something pretty important to realize. So that's like the first part of this move. You have your interior range trend. And the hold level is holding by holding this trend. So that this hold level is holding, right? This like that's what I say right here with this trend holding. This hold level is holding because the hold level creates a trend. So it's just kind of like follows along it. And this is one of the things I wanted to get into kind of in this final month of mentorship is kind of this deeper part of the way trends work. So yeah, this hold level, and it's why sometimes people see moves, and I always will remember the one time on Chart Raiders where Nuke had tried to take a level like this and there was a trend and the trend broke something out here and he was so confident this level and this broke and I was like, yeah, no, it's just once this breaks, the move's dead because that trend was the same thing as to where this level was that trend. So when this broke and he tried to catch the knife here, it could have never been because it's already a tested level. Like you're buying an already broken level. The level already collapsed right there. So the interior range trends and understanding the continuation of that level and how they go is very important. So that's something about range trends that needs to be known. Now, with that said, you now have an interior trend that's controlling this move. And you kind of have like an allowance with trends. Yeah, I see Nuke typing. I know he's going to say, I remember that. Yeah, I know you do, dude. It's okay. We all learn. Oh, sticky with the exposed. You knew all along and let me get rolled like that. Yeah, I told you it wasn't gonna hold. I was like, no, dude. And you're like, yeah, it's gonna hold. I was like, okay, man. So then we have kind of an allowance with this interior trend. So this trend is representing the breaking of the interior range. And this trend is representing whether it can hold or not. So understanding which trends are doing what in a move is also important. So we kind of have like this allowance with trends. Like we have a 1 hour level here that creates a trend. And we don't have anything else, but what we can have now is a 15-minute trend. We can have a 15-minute. So we do have this 15-minute. And if you were to say, you know, this was a 4-hour trend, it can be. So it does have an allowance of being able to adapt once. So this can actually adapt once given enough time. So this does have like like one allowance of time frames, right? Or if this was the hourly and it was blue, but it just wasn't enough time yet, it does have that allowance. So let me find an example of that. Okay, this is a good example. Say you are here in the move, okay? Say you are right here in the move and you're like, okay, hourly trend. Like you can't make a trend here. There's no trend to make. Hold on, there we go. There's no trend to make. But if you were to go to a 15, you indeed could have something like this. So in this case, you could have the allowance of allowing this trend to break. So whatever 4-hour level this is hitting back here, and this is proposing to be the trend from that range, you do have a bit of an allowance with this trade where it can adapt down once to an actual 15 because it does have that hourly landscape on it. And even if you were to go here and say, oh, well, what about the 5? The 5 is even more accurate. Yeah, great. The 5 is accurate. And then you have the allowance to go to that 15. So let it pull back, right? Oops. Let it pull back. You have that allowance to, create your range trend here and then here, right? Like you have that right there, right? And this interior range trend breaks, and it just represents, kind of like this level of the move. And you have that. Well, let's just go forward a few candles, see if this gets hit here. Yeah, it does. It's perfect. This level gets hit. And so you have that allowance to say, okay, this is a 15-minute trend and it did break here. Well, if this is breaking, how come, why can't we use, like, what happens there when that 15-minute breaks? Well, you do have the allowance to adapt it out, and so like you have even like the allowance to create a 4-hour here. So this 1 hour could have broken as well. And you could have now went and adapted it to the 4-hour, given it has enough time to sit there and manifest its move, right? Like given that this thing was going to just like come up here and break down here and comes back and attacks this level, that could have been your 4-hour trend. But there is no more allowance after that, I don't think. Yeah, because you don't have a blue candle on the bottom. So there's a certain allowance with trends that when you have the higher time frame blue candles like this on a 4-hour, even this one, it does allow you to enter like a cycling scenario, or a scenario where you stay in a range. Like you create a cycle in a move, or you stay in a range where you have, kind of this just continued part of a move like this. Like you just stay in this range. Like you're just there, right? Like here would be maybe an example we could, oops, no, that's the wrong one. We won't need that. So here is like an example of a 4-hour move. Like we have probably a lot deeper trends and why this one breaks over and over. So like, okay, let's start here. You have the 4-hour. You actually even have a daily here. So you have like a really big allowance on this trend. You have the 4-hour, and you can't attach any of that stuff, but we do have an hourly. We do have an hourly that could go like right here to here. So we're going to be like this to this, and that breaks. So that's fine. So you have something like this, and you could even do like the 15-minute trend, and you could do interior range. They're going to leave that. So you do have this trend here, and like hourly to hourly here is like obviously a little too sharp. You'd be inside of an interior range, and then you'd just be moving it out to the 4 right here. So then if you're moving it 4 to 4, that would be your starting point. But really more so the hourly, and then this can break. You can hit that trend, and it can break, and you are afforded to be able to go up and say, okay, here's a 4-hour trend, right? And so this move can stabilize based on the fact that this trend is simply like, oh, hit the origin level, fine, create the 4-hour breakout. And that's when you're going to see stuff like these origins bounce more often, is when you have that. So then you have your 4-hour trend here, and hell, you even have a daily. So you can actually even go back to this and adapt it one more time. So when this trend breaks, don't expect the move to be dead. So let's see. Okay, trend broke there. This move isn't ready to be dead yet. Instead, it has the allowance to go and adapt this to that daily right here. So you can adapt this to the daily. But now at this point, there's nothing left to adapt. There's actually a weekly still too, but that's okay. I don't think you're going to be wanting to use a weekly, because then you'd be in the scenario where you're holding this move for, okay, if you held this move out to here and you could make like an actual weekly architecture, sure. But you're not there yet. Like you're still within the first like 7 days. At this point, you're like, oh yeah, if we hold for 14 more days, sure. If you hold for 14 more days, you can break one more trend. You can come out here, break this trend again, stabilize off that. But like now at this point, you don't have anything left. So now you're starting this decycling process, right? You're starting this process of decycling the move. So what do you have now off of this? Don't have distribution here. Don't have distribution here. Don't have it here. You have it here. So you can start to mark like an interior trend like this. Don't have it on the 15. Don't have it on the 5. Okay, so now you have an actual usable range trend, right? So now you have like a really high level advanced range trend. So this is something people haven't been doing yet, but you can see that having an allowance on this candle, being that it's white, you don't really have anything you can go off of. So you don't have a 4, you don't have a daily, you don't have an hourly, you don't have anything. So actually your base point cannot be this, but what it can be is this. So you do have a 4-hour here, okay, we actually have something we can use. So now we have a very different type of range trend that you guys have never seen before. And this will be what kind of controls the move. So when you go down to this, and this range trend will actually ultimately break this move. So when you go down to this and you see like, oh, here's my trend. Look how perfectly it's being respected, right? Come back down to here. Look at that. Bang, hits perfectly. So this is called trend allowance, or like I like to call it trend allowance. And then you see when this trend breaks, you see how the move is dead. So this is like this is one of the final topics I'll go over in mentorship, and we'll probably spend a few weeks on it. This is a very different way to do a type of trend that controls a move. Yeah, at just a very, very much of a higher level. And I just call it trend allowance because there's a certain allowance that you have on trend. Call it whatever you want, call it reverse trend. I don't care. I call it trend allowance because there's a certain allowance that a trend has. There's a certain tolerance that it can go through. And so this is finding like polarity with trends, which is again very, very new for everybody. So trend polarity is something we've never talked about before, but this starts to put those pieces together for trend polarity. Everybody follow so far? Okay. But you can see that this trend here, very unassumingly, what might feel like, oh, this is weird. Why would we use this trend? But like we mark this on the fly and look at this trend and look at when it breaks. It's actually just like completely crushes the whole move, right? So this is how you find polarity with trends, and where trends actually become usable pieces to buy into. So imagine all this time I've been telling you guys not to buy trends, but there is a hidden trend that you can buy, which is always like a polarity breakout trend, which ends up being crazy in itself. And then so you can see it right here, and how, I don't want to say primitive, but just how raw this trend is, and how visceral the reaction is when this trend breaks. It's just like it's fucking, the whole move is dead. I guess you probably get like a one hard close candle on it here at the very end, like a one hard close candle, and then 1 minute later, after that hard close, this thing drops 3% in a 1 minute candle, right? So that's how you see it. That's how you see trend polarity. It's a 3% drop on a 1 minute candle. But like if you follow the logic, the trend, it's like 100% right there. It's no mistakes, perfectly accurate every single time, no room for interpretation. And it is how you find like really, really insane polarized trends. Parts of the move that control it all, I guess, like top level architecture. One of the pieces of what I would consider like top level architecture. Let me catch up on chat here. 1 second. Okay. Got it. What about the daily chart? Okay, we roll like that. Scientists who made these charts are psycho. Yep. Yo, what? That trend is nutty. So the idea for that example there is if you don't have a swing base, use the highest time frame. That makes sense. Yep. Yep. Absolutely. Well, you saw how I found it. It's like a trend allowance, right? There's like a certain allowance on the trend that allows you to see what's happening on a move. This is like trend allowance is the best way to put it. So yeah, when you're looking at this move, now we can go back to this and say, I think I'm expecting static answer. Seems very non-static. Yeah, and now we can go back to this move and start looking at this kind of like the same idea of trend allowance and why this thing pumps so much. As you have your hourly level that was tested, but what like this needs to hold because it's holding this level. So like your trend here, it needs to hold the move. That level has to hold. You don't have any like bases you can develop off of this like swing low here, like whatever this little low point is. You don't have any bases of the move you can develop. At best, you have like 15-minute here. So if you ended up getting all the way like out here and you broke this 15-minute, like obviously that interior trend is going to collapse the move, right? But what you have is you have this part of the move is you have this 15 to this 15, and you don't have an hourly, and you don't have a 4-hour here. Like I'm going to clean this chart up a bit here. Let's just delete a lot of this stuff so it gets a lot cleaner. You're going to take this off. You're going to take that off. You're going to take this. That's fine. we can just do it like that. We want to put that one trend back for clarity. I guess we can. I guess we can put this one back for clarity. So because you don't have hourly, yeah, because you don't have any allowance on this, this trend kind of has to hold or the whole move collapses down. So you don't really have much of a choice with this trade. Like you don't have any allowance on this trend. This is not a situation where this trend is going to break. You're going to adapt it out. It's going to break again. You're going to adapt it out. You don't have an allowance on this because they are simply just white candles as you go time frame up. So you don't have, well, okay, you have a 4 hour, but do you know how long that would have to stay in this range to create like a 4 hour move down here? It would have had to come out and swing down for like another day or two and stabilize for the next day or two. Then sure, you have the allowance of a 4 hour and then you can break that trend down. But when you're first in this move, like you can't, for the same reason you can't use a weekly, you can't use a 4 hour candle, two candles beside each other. Like you need a good 5 or 6 candle separation and then just to like come back and hit this, or at least, you know, blue, white, come down and create a blue candle over here, somewhere where this can swing to, because it can't swing to here because you've got an interior trend right here. So it has to be past this trend. So you need like another blue candle here and then another one here, and then you stabilize. So you need like 12 to 16 hours more of like kind of sideways down movement in order to catch some kind of level and stabilize. So you actually don't have any trend allowance on this trade. All you have is this 15-minute. There are no higher time frames to adapt this to. So this is polarity in the move. This is controlling it. And so when you see this trend holding like this, that's why you get this breakout like you do. I'm a little surprised it went straight over this. It was like right here, 68. I remember it was like 68. So I'm a little surprised it just blasted right through this, but actually don't know if it did or not. Let's go take a look, because I am a little surprised it just moved right through this, which would have been polarity on the move. Maybe it didn't. I actually didn't watch in the moment because it happened after I was sleeping. So like it actually blasted right over it and then came back. Not sure what this blue one is. That's that trend from before. That's fine. We don't need to delete that. But it actually blasted this level and just came back and you know, went right over top of it. And because that was kind of the final, you know, polarized moment. But for this is the reason why this trend broke this move up, because it is polarity, because you don't have any other, like it's not the same as this move. It doesn't start with a 15 that is also an hourly, that is also a 4, that is also a daily, that can be constantly adapted and massaged out through time. It doesn't have that on it, right? So if you can't adapt the move, once the 15 breaks, the whole entire move is breaking, the entire interior range, like this entire part of this trade from this point, like once you break this trend, imagine if we go back to the hourly here, imagine if this level here, that trend is that level, and this is representing the deep dive of that level. Like you're breaking the deep dive and then there's nothing left. So you're actually probably just failing the move or coming back down into this range here once you break this interior trend. Like you're not, the breaking of this interior trend with no allowance to have it adjusted out from the base, to not give it any more points. Maybe, I'm going to say like this is a strong maybe. Maybe you could have broke this and held this trend, but I wouldn't be so certain that this trend can hold. Because this level's gone. This level is now the trend, right? Like that level is now the trend. Break this with no time frames, no allowance to adapt it out again. This trend can never be. So once you break this once, this trend is gone. It can never be. So the only thing that can hold your move up is like maybe an untested level. You have, you know, a level here. Can you hold this trend? Maybe. I guess you'd have to go in the moment and see like what was happening. Like there's a 15-minute untested here, so maybe you could have went and targeted this. I just don't think you would have had the same kind of, you know, rip up that you did. I just don't see it how you would have had the same kind of like ridiculous rip up like that. But I can see why it happens off the 15. Like you can totally see this, because there's nothing left to adapt it to. There's no other trends it can create. So it does have to hold the move, and when it does, it just completely breaks the range. I think that's like a huge part of understanding polarity in a move, is understanding where a trend can move to and can be created because of the allowance that it has. That's a big part of your architecture on your charts is trend allowance. It's a lot of people with questions about trends, and it's like, okay, trend allowance. Trend allowance is a huge one. We could even go to the current part of the move and look at trend allowance right now. And you always want to start with like, look, you have a daily here. You have a ton of allowance that you can have on this trade. Like there's going to be everything here. So this trend can actually break multiple times regardless of what time frame you're using now. So now you can go and you can say, okay, do you have the 4 hour? So like I'm going to draw all the trends that you could have. Now you have the 4 hour here, you have the 1 hour there. So this trend could break. You're going to have an hourly, that trend can break. You're going to have a 15, this trend can break, right? So your 15 would have been like this to this, and that breaks. So now you're in the hourly right now. So now you're here to here. So if you were to do this, you would go like this now, and you'd go hourly to hourly. And this is the trend that's in play. Typically we go highest time frame down, and we do, but those time frames aren't available yet. So for the simple reason that if we were to go to the daily, this isn't available yet, so we can't use it. 4 hours too fresh still. 4 hours not going to be usable either. It is technically usable, but if we have the allowance of the 1 hour to the 15 minute, and the 15 minute would have been your first trend right here, and that broke and this stabilized the move, well, now we're in the hourly. And so this can break, and now it can create the 4 hour. So you have another pullback that you're going to have happens. You're going to have another moment where you go, you break trend. You're going to have another move and another pullback, and then you're going to be able to create the 4 hour. And then so you're going to be like this. And then you can, go out here and you can break that one. And then you're going to be whatever here at the daily. So you have multiple trends you can still break in this move. Like you're not ready to rip up yet. So this is all a part of another lesson that we may or may not go over called setups. And yeah, setups is we've done a very small amount in the past, but always looking at the setups of these moves has a huge implication and effect on what can happen. So yeah, I mean, trend allowance is powerful because it allows you to see how many times a move can break, right? So it's pretty great. And this being that it's been here so long, like we can break this trend without worrying about it going up, which means because we have such a big time frame here, it means we do have a lot of opportunities to take shorts. And it means that we are likely setting up some type of larger move down in this trade. So we won't get into setups. I won't talk about that too much, but with the allowance of trends comes the setup of a reversal. If certain criteria is met, of course. Could we stay in this range for a while now? Create that daily trend as a way to predict how long a cycle could move? Absolutely. Absolutely. Now, the more important part of this is going to be how the bottom of this range reacts and what kind of allowances we're given on this side of the chart as well. So that's going to be an important part of understanding what setup can happen to which side. Would be, what happens on the bottom side of this range here will give us its own set of allowances, right? So that's going to also tell us something as well. But again, that's more of like setup, which is another lesson for another time, possibly. But trend allowance is a huge one. It's one I've kept to myself for a long time, but everybody's saying this is sick. This is crazy. Oh, yep. It is indeed good stuff. Trend allowance is pretty critical in trades. There's an hourly range trend created from 21,867. 21. Oh, you're talking about before this, like from back here. Talking about from back here freestyle. How would that interact with trend allowance on the current architecture? So you're talking about like this here, this here. Always start highest time frame down. It just subjugates all issues, therefore going forth. So you've got this here. This level is controlling it, right? So I think we can just get rid of that one. That's fine. So you've got something like this here. There's no more allowance for higher time frames. So you've got the 4 hour. Is anything else broken yet? Well, you've got your 15 minute there, right? So that's what was tested. That's part of the move that targets that. So this level, so what you can say about this trade is this level, this origin level will break once you break this trend. So this is no longer in play. Trend is now in play because you won't, if you were to go right now, deep dive this, hit that green level and pull back, fine. But I just don't think that's going to happen. I think you'll more likely get out to a point where you're probably breaking this level, but that would be, the origin level right there would be what's holding that. Not sure what you're looking at with 867. So you're talking about probably something like this. 867. Yeah, you'd simply use this one here. Like you could have had this to this, but that stuff's like broken. And now you're more in this part of the trade using this as like the connected range. Connected range is another thing in the future. One hour float. You wouldn't have any float levels back here. Once you break this, you'd be here. You haven't broken that yet, so you've gone to here, which is fine. You break this, you're here as long as nothing's tested there. So it looks like you go test the origin here, break that. There's no floats. You'd have to break like above this, create something here, or like below this to create this here, which is gone. Yeah, no. Yeah, nope. And I would delete this one too. I would delete that one too. And you have, another 2 allowances on this trend. You have another two times it can break and create that cycle. So if this trend continues to hold and you start to break the architecture on the bottom, you can clearly see how this move is going to, and it reminds me a lot of just doing like perfect setups, create the 4-hour backside, 4-hour front side, combination level, polarity. Yeah, I mean, if you go and hit this trend again and start moving down, like it just screams of, like if you hit this trend again, it's going to be pretty sick entry because, okay, so let's first off, let's get rid of this because we don't need it. If you hit, trend again or some of these hold levels in here and start creating that like dump off of this, you're just starting to create a larger setup. Again, we won't get into setups today, but 626, that one I just deleted. 626, yeah. Well, I mean, it hit that, right? Like we've had that for a while, that hourly level. It hit that and pulled back off it, and then it went after the 15 and the origin. So yeah, I mean, it was good. It was good, but that's like gone now, right? So it's wild because you can see the potential of the range from the movement of the range development starts purely based on the time frame. The wick would need to be laddered. Well, not purely, but yeah, yep, absolutely. And you don't have it. Like there's a little bit of a difference in this move. What we just broke down. I think it was this one. I guess I deleted the level already. Oh, that's okay. Here you don't have anything you can adapt trends to. So you have that longer setup like this. You have that longer setup that ended up being something like, I'll just attach to this one. That's fine. It's being silly. What we did earlier in this video, like you have something like this where you needed to see the setup differently because there was no adaptation points. There was nothing left in the trade. So you have your actual trend and then you have the interior range trend, right? And the interior range trend acts as polarity. Just like you have down here where your actual interior trend acts as polarity in the move. Like it's the same thing with this green one here. It's like it represents polarity in the move right now. And then, even if you were to connect these ranges from here to here, this trend will represent the polarity of that part of the move, which also you can just take all of that stuff off. You don't even need it anymore because those levels they're not going to do anything for you. It's going to be this trend that kind of controls the move now. But the thing is with this trend, you have the allowance to go hourly, and then we're going to have to see what's going on the 15. And then, you can move it up to the 4 after that. And then you can move it up to the daily after that. And then you may not get the setup for the daily, and you may have some other kind of, interior trend off of this daily that's controlling these two, which is controlling this. So you may have some other, just like we had here in this move where we had, trend to trend like this, but then we had to use, or sorry, it was like this, but then we had to use this one from back here to create some kind of like polarity. Again, from earlier in the video, like this, we had to use some kind of interior trend because there was no points left, right? You might have the same thing happen here where you adapt from the hourly to the 4 to the daily, but then there is no like distribution candle there on the daily, so it's not like this clean easy trend. You might have to find like a hidden trend, and that's the part of the move. And then it might be like this, and then all of a sudden, you know, you're here and dude, come on, what the hell, you're here, and then you break this, and all of a sudden these are snaps, so you break that and then you just skyrocket up in like a, you know, couple candles. So obviously we can't see that yet, but you know, that's the idea behind this trend, is that, you know, it does have that allowance to create a deeper part of the move. So whenever you're looking at trends, you have to understand that when you have the highest or lowest point in a move, the color of that candle makes a major difference. It might not seem like it, but it makes, or maybe not before today, but maybe now you realize like the importance of the color of that candle is like not to be mistaken. Because if you need a white candle on the top and all you have is a blue one, that means that like if you have this here, like this is the top of your move here, let's just go like that. It's a blue candle. It's like, oh, we can't use that. That means this is your trend. And it's kind of like more of a hidden trend, right? Just an example, because we wouldn't actually use that because we have stuff from back here. But, you know, it would be like the same thing as saying, oh, use this one because this doesn't have any higher time frames. So we're on a 5-minute right now. If every single candle here, this blue one right here, if this candle was blue on all time frames, we'd actually use this one as like the interior controller of the move. Not the case, but again, that just going back to earlier in the lesson. Okay, I'm back. My brain is working overtime, Nimbo. Okay. Yeah. Yeah, there's a lot of like high level stuff I haven't talked about yet, but yep. I'm gonna keep most of it to myself for now, but I'll share a few for really cool things like this. Who asked about trends? Must be the question of the year. Great answer. Still feel like there's a million more things to do with trends. There's more for sure. Replay. Yep. I can go to sleep now. It's 5 a.m. Been awake for 19 hours. Oh man, go to sleep. Clears up a lot of doubts I had about trends. Thank you. Yeah, trends are. You just can't talk about this stuff until a certain point because people just won't. They'll get too far ahead of themselves. So I always say, I don't use trends. I don't use trends. And I don't. But there are trends that you do use. There are definitely trends that you use. It's just, you know, most trends have like a very surface level value until you really start getting into understanding like where trends make sense. They have a pretty surface level value. They don't have like a lot of usability because they just act as random levels on a chart. It's like having a 4. It would be equivalent to having this 4-hour level down here. Like it literally means nothing right now. Like, yes, it's on the chart. Yes, it matters, but it does nothing. It's also the same as having this 4-hour level here right now. Literally does nothing. Yeah, great. You bounce the level. That's cool. It probably didn't even bounce the level. You probably back tested something from in here, to be honest, or like something here. Like you back tested some kind of polarity point that was an origin inside of this that held the move down, or some type of, you know, overlying trend that created a whole level that broke. There's some form of polarity. Like the fact that you would have this marked and be like, I'm buying a 4-hour level. You might get the same price and trade, but it's just not, you know. And then, you know, like this right now makes no difference to us in the current part of the move. The trend is like the same thing. So if you have a range trend and the reach that trend develops on a higher time frame, you need the base to be the higher time frame. Would you need the higher? And if you don't have a base, no, it has to be the base. It has to be the base. The base, it has to start with the base. If the base doesn't exist, the reach doesn't exist. You can't just use higher time frame reaches. It has to be the base. It has to move forward and down in time. So that's going to be it for today's lesson. Short and sweet, nice and easy.